a savings of nearly $5,000. It's about legally reducing the tax you pay on your income. We're talking about salary sacrificing. And just like that, people, this is part 3, which is the bonus and the final part in the series that I started 2 videos ago, talking about certain aspects of employment here in Australia. For those of you who are just joining for the first time and you're wondering what I'm talking about, I have links in the description that you can access to the first 2 videos in this series. In the first part, I talked about the different employment types here in Australia. And in the second part, I dived into taxes and I spoke about how taxes work in Australia. I'm very proud of myself because I don't do well talking numbers. But yeah, you might want to go check out those videos, okay? And here is part 3 where we talk about what? Can I hear you? We're talking about salary sacrificing or salary packaging. I used to use the both of those terms interchangeably, but I recently came to understand that there might be a slight difference between the two. It's not a huge difference. It's not very significant. The outcome is still the same. It's about legally reducing the tax you pay on your income, right? But there are 2 different kind of branches to it, which is why it is either called salary sacrifice or salary package, and we will be diving into all that in this video. I am sure that you, just as I was back then, would be very interested to know how you can keep more of your money legally without having it go to the tax man. First things first, my name is Chioma. For the benefit of anyone who is joining for the first time, I hope this will not be the last time you stop by here. You might want to join the family by subscribing. At the very least, give this video a thumbs up and thank you very much. Okay? The second thing I am going to quickly get out of the way is I am not an accountant. This is my disclaimer. I am not an accountant. I am not a financial expert, financial analyst, financial anything, okay? As I mentioned previously, I'm not very good with numbers, but I am going to try my best in this video. And what I want to do here is just give you a basic knowledge of salary sacrificing or salary packaging, just in case you've never heard the term before, or maybe you've heard about it, but you really do not understand how it works. I am hoping that this video helps. I will always encourage you to have a look at other resources online, and there is a plethora of them that you can find online. But of course, if you would actually like to sit in front of someone and speak to them face to face about your financial needs, or if you want to do any kind of financial planning, then your accountant might be a great first step for you. Okay, now let's talk about salary sacrificing. What is it exactly? Salary sacrificing or packaging is an arrangement that you go into with your employer, all right? And it is related to accessing certain kinds of benefits. You might want to call them fringe benefits, and having money go into those fringe benefits from your pre-tax income. In a nutshell, that's what salary sacrificing is all about. Like I said, there might be a slight difference between salary sacrifice and salary packaging, and up until recently, I didn't really know what the difference was. But what I understand now is that salary sacrificing speaks to the situation where part of your pre-tax income is sacrificed towards your superannuation. So superannuation, in very simple terms and in language that most other people would understand, is your retirement pension. Yeah, so that's your retirement fund. Here in Australia, we call it superannuation, or super for short, because Australians shorten everything. When I say super, I mean your superannuation or your retirement pension. Keep that in mind. So salary sacrifice is connected to your super, and salary packaging is connected to other types of fringe benefits, which are in some cases tangible, things you actually pay for, things you buy. So keep that in mind. That's the difference between salary sacrifice and salary package. Let's begin with salary sacrifice. First of all, you need to understand that when you take up employment here in Australia, your employer is obligated to make contributions into your superannuation, and this is extra to the salary that you get paid. And of course, this is money that you cannot easily access until you reach retirement age, right? When you decide to salary sacrifice, you're going into an arrangement with your employer that allows you to make extra contributions into your retirement fund. And that is a way that people can build up their retirement fund even quicker. It's up to you. It's it's an opt-in arrangement. You're not forced to do it. If your employer offers the salary sacrifice or salary packaging, then you might opt into this if you want to do it. Another thing to keep in mind about your superannuation is that it is taxed at 15%. Okay, up to a certain cap. Now, I don't want to confuse you. I don't want to go into so much details about income brackets and marginal tax rates, because that was the topic that I discussed in the previous video, which is why I am encouraging you to go watch that video. Okay, but I want you to keep that in mind. Your superannuation is taxed at 15%. However, your regular income, depending on the income bracket that you fall under, for most people who earn above minimum wage, they will be earning above $45,000, and that puts them in the income bracket for a marginal tax rate of 32.5%. So imagine it, getting taxed at 32.5% versus getting taxed at 15%. I hope you're beginning to see a picture here. Going back to the salary sacrifice thing, out of your pre-tax income, your employer is going to withhold a particular amount to go into your superannuation. Basically, you're sacrificing that part of your income into your superannuation fund, which is why it is called salary sacrifice. Of course, when that money is withheld, it means that you're left with a reduced income, and that is where your normal tax will come out of. If you are within the income bracket of 32.5% marginal tax rate, then that percentage will apply to the amount that is left after your salary sacrifice amount has gone out. That is already one way that you're reducing the tax that you pay, because you're not getting taxed on the full gross amount. You're only getting taxed on whatever is left after your salary sacrifice amount has gone out. But on top of that, if we're looking at the extra contributions going into your salary sacrifice, it is getting taxed at 15% because you are contributing that amount into your superannuation. So instead of having that amount also taxed at 32.5%, which is the marginal tax rate for your income bracket, you're only going to be taxed at 15%, which means you're making some savings there as well. So now let's talk about salary packaging. Salary packaging, on the other hand, is connected to other types of fringe benefits. And again, this is already predetermined by your employer. Different employers offer different kinds of fringe benefits, and it's up to you to decide whether that fringe benefits would be useful or beneficial to you, and whether you want to opt into the salary package program. Some of the fringe benefits that you might package your salary towards, and pardon me, I'm looking this way because I'm consulting my notes, would be things like your mortgage, your rent, car loan, tools and equipment, school fees, laptops, it could be anything. You decide, as I said, if those fringe benefits are useful to you. I'm just giving you an example. Now, if you choose to have part of your salary packaged towards that fringe benefit, that amount will also be coming out of your pre-tax income, same way as the salary sacrificing, which is why I said that even though there's a slight difference between the two, the both of them in principle still work in the same way. All right, let me give you an example. In one of my previous jobs, I opted into the salary package thing, and my salary package was put in a debit card. Yeah, I could use this card on just about anything. I could use it to pay bills, I could use it to buy groceries, and that was the arrangement that the employer had at that time. You could either choose to get the debit card, or you could nominate something else, some other fringe benefit that your salary package would go towards. I opted for the card because it gave me flexibility to use the card on anything. The only thing is that with either salary sacrifice or salary packaging, you cannot access physical cash. So even though I got a debit card, I couldn't slot that card into an ATM and get cash back. Yeah, but I could use it wherever cashless payments were available. As I said, not every employer has the arrangement where you can get a card. For some of them, if you're salary sacrificing towards, for instance, buying a laptop, then you would have to give them details to ensure that your salary sacrifice goes directly into paying off that laptop in the installmental payment plan that you have set up. Having said all of that, let me give you an example. Maybe it will help you to understand it a little better. So imagine that you're earning a total income of $80,000, right? That puts you within the income bracket for a 32.5% marginal tax rate. And at that marginal tax rate, the amount you should be paying on tax would be somewhere around $16,467. However, if you choose to salary sacrifice $15,000 out of your gross annual earnings, which is $80,000, okay, you will be left with a reduced income of $65,000. The marginal tax rate of 32.5% is only going to apply to the $65,000. Let's assume that you want the $15,000 to go in as extra contributions into your superannuation. That $15,000 is only going to be taxed at 15%. If that amount did not come out of your pre-tax income, $80,000 you make as your gross income would have been taxed at 32.5%. If you do your own calculations, you would find that that leaves you with a savings of nearly $5,000. Okay, so that's $5,000 more out of your salary coming back into your pocket instead of going towards paying tax. Yeah, win-win. On the other hand, if you're doing the salary packaging, something you need to keep in mind is that certain fringe benefits attract taxes as well. Okay, so it's not every fringe benefit that is tax exempt. There are some fringe benefits that attract a fringe benefit tax. That's what it is called. And if the fringe benefit you opt in for attracts the fringe benefit tax, you might get a reduced amount in your salary package just to accommodate for the tax that your employer is also liable for in relation to the fringe benefits. So it is your employer that is liable for that tax. However, your employer might then choose to reduce the amount that you actually get in your salary package to be able to offset that tax. I hope that makes sense. So if you were going to opt in for the salary package option, it might be worth it to have that conversation with your employer to know whether the fringe benefit you're interested in attracts the fringe benefit tax. If it doesn't attract the fringe benefit tax, good on you. It means that you will be getting the full amount within your salary package. Again, it is something that requires careful consideration. You want to be sure that at the end of the day, you're not ending up paying more in tax than doing the opposite. But salary sacrifice can be a way for you to reduce the tax you pay on your income if you are careful. So my advice would be that you have a chat to your employer, have a chat to your accountant if you're thinking about opting in for the salary sacrifice or the salary packaging before you take it up. If you have any more questions, please leave those in the comment section. I will do my best to address those. But that is it for salary sacrificing and how you can actually save more on your income and pay less on tax. Don't forget to give this video a like before you go, okay? Thank you so much for your support throughout this series. I'll see you again in my next video. Bye-bye.